So you were telling me about your other bets. You stopped at financials. What else do you...
Also, in the non-financial, our sectors remain the same. Consumer and auto ancillaries and yeah, basically, and a little bit of infra. But that is not even infra, that is this old road builder kind of thing going on.
But they've not performed so
no, one of them has performed. We were anchor in that and it's up 60%, so you can imagine which one it was.
But not the vanilla L&T type place.
No, that could be on the other side also.
Any pharma? And none at all?
No, we have only hospital, yeah, no pharma. And this diagnostic chain, and we are short to pharma. See, pharma is very easy to make money on the short. The day this problem comes off, any to US this thing.
FDS.
Don't worry about 8-10% because if you're broadly in the market on that day, it is nothing. Because at worst, it will not fall anymore. But broadly, nothing will happen to that stock for 2 years. Most probably it will fall a little bit more, maybe another 5-10%. But it's very difficult to imagine that next day you will lose. So the first thing of shorting is don't think that you're making money. The thing is you're not losing money. It's a big highlight. Why? Because randomly our market falls 5 to 10% in a month every 5 to 10 months. For example, in August of 2016, or was it 15? 2016. Nobody remembers why. No, sorry, no. August of 2015 and then Feb of 2016.
And June again.
But if you ask exactly why it fell, after a few days, everybody's forgotten except that it fell. And in those days, these shorts suddenly give you 5-10%. And if they haven't bled you in the other months, it's like you make 5% extra, and that is what has worked. So the intention in shorting every time is not that it will fall apart, but that it won't go up and bug you.
What do you think causes the next correction? India-specific factor. When you think
it could be monsoon type. You know, there was this scare for one day.
Big enough to precipitate.
No, not today, but it could be. Yeah. Because you know, then again, the whole broadening of consumption and revival, and it puts more stress. And we are talking about a correction, not a disaster, right? So although we can say that monsoons now are easy to handle, easier because 2 years were good and water is there and reservoirs there, whatever. But still it will be a sad thing because now we are starting to recover. We were recovering in October. Now they say even currently sales are good again. And again you have one more event. That will be sad. But GST will be considered as a problem in a good thing. So even if there are problems, I think the stock market may not care. I won't care unless one specific something happens. But broadly, if suppose there's an issue of inventory, tax paid, not paid, God knows all these things, I don't think people will care. In fact, one reason why the market may be getting so much foreign money in this month is because they feel that now GST is on.
Okay.
See, GST has a very good theme which you can spin off the GST, which is unorganized to organized, you know, and it's a valid theme. It's not, you know, it's like tech was a valid theme for many years, infra was, it doesn't happen just in 1 month everybody knows the theme because people then start discovering new names, they start slotting them in those categories. I think it's a valid theme.
To be played through what kind of sectors, principally?
Mostly, although we are not buying because of other issues, one could be building material, you know,
plywood
paint and even tiles and all these things. Otherwise, you can broaden it. I can even say in my a diagnostic chain. I can say in my temporary manning. There are many which I own. I could, in my mind, categorize them as unorganized to organized.
Why not buying building material though? You said
no. I thought because you know the real estate sector or the new startups are, I mean, because you need new in this. Only maybe 20% is to rebuild your old home or put plywood in a home which you bought. So that looks at new homes, who's making, I mean, new apartments or, you know, homes. So we haven't done it, and anyway, they've gone up also quite a bit.
Does it feel like a bull market kind of a situation right now, Samir, or you're not convinced?
No, I'm totally convinced. I was always convinced. Only the demonetization confused me for a 30-day or 20-day period. So the first thing is, we may call it a bull run only if you look at our NAVs of our funds or everybody's fund. But if you look at index, it's not been a bull run because there's been no index level rally. It's been a mid-cap rally since maybe 2014. So therefore, I can always tell the world, why are you calling it as if it is some peak of a bull run? Last year was negative, 15 was, by the way, negative, 14 was up, 13 was negative, and in dollar terms, since 11, it may be negative. So please don't say that. So but in our heart of heart, we know that we've enjoyed massive bull run in the mid-cap stocks. But therefore, I say it can happen, it can continue, because there has been no rally at the index level for so many years. And that is because 30-40% of the listed stocks, which were in all these sectors, material, capital goods, real estate, and therefore state-owned banks were also doing badly. Now, their earnings may be good. Some stocks have also gone up. So we also have backed off from many shorts in this sector. That's why we went more into IT. But we are not going to go the other way so easily, not because we believe that the earnings will not come through, but we are not of that background to buy, the pure commodity type companies. But people will buy them, and maybe it makes sense. Who knows?
When do you see a more inclusive bull market, not like the ones that we saw in the last 3 years, where some sectors did very well, some very poorly?
No, I think it's already happening. That's why the shorting had to change, because for us also, in some sense, we bought those stocks by covering the shorts. So previously, you were asking how to make money on shorts. For 3 years, it was very easy to make money on telecom. Even that became a bit more difficult now with all these things.
Have you changed your mind on that
So
sector?
we covered, and then...
You got long?
No.
Oh, reinstated shorts. Wonderful.
Anyway, so the bottom line is that there is always something where you can afford to do a bit of shorting, hoping that you're not going to be blown out. And sometimes you do on a few stocks, but that is the way it is. So it is more inclusive already, I think. I don't think it is that it is narrow right now. It's not at all narrow right now. Where you tell me, other than maybe this technology, really everything is done okay.
So do you see a market which is moving along with earnings, or PE expansion happening?
Right
even
now
from
it is
here?
not moving with earnings, because there have been no earnings. But you are broadening the market because people are thinking that those sectors which were not doing well also will have some earnings now, and driven primarily first by the price of the commodity, secondly by the protection, duty protection, and third is this global new phrase, reflation trade, which is basically commodity price going up and things like that. So some part is on a reasonable projection that if you take today's price of commodities already up X% more than last year, so why won't you get a full year of earnings rather than, let's say, you got half year with the previous price. I mean, with this price, but in the previous year. So,
what's the biggest risk, according to you, to this market, which can derail this trend? I'm not talking about a 5% correction. Something which makes you change your mind.
I'm a follower in these things, which means that we have always got long and short. If the market falls 5% and we are given some reason which we can connect to it, that we say, possible, we will add to the shorts. We are not going to overly analyze like 8 anymore, because we just say it doesn't matter. If it turns out to be wrong, we'll be whipsawed for a few days. But I'm not shorting the index on which I have very less conviction, because suppose I'm bullish otherwise, and then something happens in the world, like a flash crash in the US. Now, sometimes you think it's a serious problem, and sometimes you think, who cares, right? If I short the index, I don't know why I'm shorting the index. But if I'm short these stocks, 15 of them, which I was short on a perfectly good day, for me to add 1% to each of them, how much time does it take? 0 time. So I add 15%, my net suddenly falls to, say, 45. I've done my job. So that's how we don't overly analyze or try to build, because you never know that something may be bad but is happening tomorrow or not at all. First of all, right now I can't imagine too much of that.
One last question. Is your category getting money finally? Because 3-4 years, the emerging market funds, India-specific funds were not getting any cash. Have we come around to the point where you're seeing some interest?
Actually, that little bit we are all getting. I think the reason why you see, because you don't interview index fund managers, so the category has got converted to index funds. The only good thing for us or people like us is mutual funds get compared to index funds. We at least don't get compared to index funds because our guy is used to active management, and so we get compared to mutual funds. And we are a little better than them, so yeah, a little bit we are getting. We're all getting.
But who's getting the bulk of the money?
In ETFs.
All of it again?
Yeah. Because, it's such a trend, and it's so sad. Because if you look at the performance of the Indian mutual fund managers, ignore me. Look at the Indian mutual fund guys, the big guys. They all beat the market, or over time have beaten by 5-6% per annum for like 10 years. Actually, some of them for 20 years. I did for 20 years. So, but, ETF saves you 10 basis point, 1 basis point, waste of time. I have research to show, which is available on Google by just typing it, that ETF guys do much worse than mutual funds. Why? Because the ETF buyer thinks he's a trader. When he buys an ETF, he thinks, I am going for the ride. Yeah. So for those 2 months, his management fee might be lower. But he walks in and out at the wrong time. Whereas a mutual fund guy has a little bit more commitment to his investment. So at the end of the day, actual data of some X number of thousands of people has shown that people who invest in index funds at the end have lower returns than mutual fund, only because they are trying to time their entry into a index. But I am not. Why am I defending mutual funds at this stage?
They're getting a lot of money. They don't need your defense.
Exactly.
Samir, always a pleasure. Thank you very much.